So, you're a self employed chef, and you've probably got a target income in your head. But let's get real for a second. How much business do you actually need to generate to take that money home? Well, in this explainer, we're going to break down a really powerful financial model that's going to help you bridge that exact gap.
All right, let's start with this number, 38,857 pounds. This is our benchmark, okay? It's the average salary for a head chef over here in the UK. For a lot of private chefs, this is the figure they're aiming for, or, hopefully trying to blow past when they go out on their own. But here's the thing. When you're the one running the business, you don't just get a paycheck for that amount. Not at all. You have to build it from the ground up. So the real question is, what does it actually take to end up with that 38 grand in your pocket? That's what we're about to figure out.
Okay, here's how we're going to tackle this. First, we'll talk about something I call the salary illusion. Then, we're going to shift our whole way of thinking from pay to profit. After that, we'll dive right into the 75% gross profit model, apply it to 3 different income scenarios, and finally, we'll get a little reality check with tax, NI, and VAT.
So let's kick things off with this super common trap, the salary illusion. Basically, it's the massive gap between knowing what income you want to make and knowing the actual sales turnover your business needs to hit to make that happen. Trust me, they are two very, very different numbers. And that leads us straight into this next part, which is a really fundamental mindset shift. The moment you go from being an employee to running your own show, you have to stop thinking about a salary. You got to start thinking about profit. It's the language your business speaks.
And this slide really breaks it down. An employee's salary? Simple. It's a fixed amount you get paid. But as a business owner, your starting point is gross profit. That's the money you have left over from your sales after you've paid for all your ingredients, but before you pay for literally anything else, including yourself.
Okay, so let's get this definition crystal clear. Gross profit is your total sales minus your food costs. Simple as that. Just think of it as the big pot of money you're going to use to pay yourself and cover all your other business expenses. We're talking everything from insurance to marketing. All right, enough of the theory, right? Let's get practical. To actually plan our finances, we're going to use a pretty standard tool in the industry, the 75% gross profit model on food. This right here is the simple but super powerful idea at the heart of our model. If you're hitting a 75% gross profit, it just means that for every 100 pounds you charge a client, 25 pounds goes to the cost of food, and you're left with 75 pounds in gross profit. And here's the magic formula for working backward. It's so simple. Step 1, start with the profit you actually want to make. Step 2, divide that number by 0.75. And step 3, what you're left with? That's the total sales turnover you need to generate. It's that easy. Now, before we run the numbers, let's just be clear on our assumptions for this explainer. We're basing everything on a weekend-focused business model. So we're assuming you're only working Friday, Saturday, and Sunday. That gives us a grand total of 156 potential service days in a year. All right, let's get to the exciting part and see how this all builds up. We're going to apply our new formula to 3 totally different income goals, just to see what it really takes to hit them. First up, a modest but really common goal, earning an extra 20 grand a year. Maybe you've got another job and this is your side hustle. What does it actually take to generate that? Next, let's look at our benchmark. What kind of sales turnover do you need to generate a gross profit that actually matches that average head chef salary we talked about right at the start? And finally, let's get ambitious. A target gross profit of 85,000 pounds. This is a seriously high income goal, and you're going to see how the numbers really start to scale up. Okay, so this table really puts it all together. Look at this. To hit that 20,000 pound profit goal, you need about 171 pounds in sales every single service day. To match the head chef salary, that jumps up to 332 pounds a day. And for that ambitious 85K profit, you need to be generating over 727 pounds in sales times every single Friday, Saturday, and Sunday. The big takeaway here, your required sales turnover grows way faster than your profit target. And now it's time for a little reality check. We know how to figure out our gross profit, but you can't just take all that money home. Nope. Let's talk about the big hurdles. Tax, national insurance, which is basically a UK social security contribution, and the big one, VAT. Please remember this. I cannot stress this enough. Gross profit is absolutely not your take-home pay. It's the number before all the deductions. Getting this wrong is a huge mistake. And wow, this chart just says it all, doesn't it?
For our high-income scenario, that £85,000 in gross profit gets whittled down to an estimated take-home pay of just over £60,000 after income tax and national insurance. That's a difference of almost £25,000. And then there's VAT. Now, the most important thing to understand here is that VAT isn't based on your profit. It's based on your total sales turnover. This is a complete game changer for your financial planning.
Here in the UK, that trigger point, the VAT registration threshold, is currently a turnover of £90,000 in any rolling 12-month period. The second your sales cross that line, your business has to register for VAT.
And this is the major lesson. Let's go back to our high-income goal. To make £85,000 in profit, we figured out you need over £113,000 in sales. Well, that sales figure sails right past the £90,000 VAT threshold, which adds a whole new layer of financial complexity to your business. Which brings us to the core takeaway of this entire explainer. The question you should be asking yourself isn't just, what do I want to earn? The real business question is this one, right here. What turnover do you need to generate at your chosen gross profit across the number of service days you can realistically sell? Look, you now have the model to work backwards from any income target you can dream of. You can actually see what it takes, not just in profit, but in real-world sales. So the final question is all yours. What business will you build with it?